Holy smokes everyone, I've got a quick breaking news update. What's happening in the US with the jobs market, with the stock market, the precious metals market? What the heck is going on? We're in an upside down world now where good is now bad and bad is now good. We've got some breaking news on the latest unemployment data, and we're going to go over this data and look how the markets are reacting. And then we're going to have a look and a little bit of a discussion on what this could mean for the markets moving forward. Okay, everyone, let's not waste any time. Let's get right into it. Looky here, everyone. Companies hired nearly 1 million new workers in May, ADP says. Now, you're probably thinking, this is great. People are going to have jobs, they'll have more income, they'll be able to go spend that income, it will help the economy, companies' earnings should go up, everything should be good. But no, the market's not likey good unemployment numbers. You know why? Because the markets, they've been partying right now. With all the stimulus, with the punch bowl, the market's been getting cray-cray. But now, if employment skyrockets and the unemployment goes down too quick, that means the party's going to end for the markets, the punch bowl's going to be taken away, and the markets are just going to be stuck miserable with a hangover. Alright everyone, back to the report. I'm fired up today, I don't know if you can tell. So it says here, private payrolls increased by 978,000 in May versus a 680,000 estimate. And this is crazy everyone. It seems like all these guru economists, the best of the best they're meant to be, they're getting all these calls completely wrong. What's going on here? Okay, so that was the largest gain since last June as the economy was emerging from the early pandemic lockdowns. We are starting to see now a quick recovery in the jobs market. Leisure and hospitality showed the biggest gains with 440,000 new hires. So this was the biggest jump from April's 654,000 and the largest gain since the 4.35 million added in June 2020. Well, that wasn't really just jobs added, it was just people getting their jobs back after lockdown. As the national economy came out of the lockdown, economists surveyed by Dow Jones had been looking for 680,000. So this is 50% more approximately than the estimate. And so the market's not going to like that. I'll get into the markets in a moment. And so the April total was revised sharply lower, so that's strange, from the initial report of 748,000. So let's have a look what specific jobs are being created. So education and health services added 139,000, though the most came from healthcare, while trade, transportation and utilities contributed 118,000. Professional and business services saw 68,000 new hires, while other services category saw 69,000. On the goods producing side, construction payrolls increased by 65,000, while manufacturing added 52,000. And so it says here the official non-farm payrolls count, or May, is expected to show growth of 671,000, a drop in unemployment rate to 5.9%. And also this just coming in now as well, breaking news, jobless claims fall below 400,000 for the first time since the early days of the pandemic. So initial claims fell to 385,000 for the week ended May 29, a decline from the previous week of 408,000 and below the Dow Jones estimate of 393,000. Okay, and the rest is just more boring statistics and stuff. We don't care about that. We want to know, what does this mean for the markets? What does this mean for our bags and our tendies? Let's get into it. All right, so let's see how the pre-market is. I'm recording this about half an hour before the markets opened. The markets did sell off briefly, but they're not down too much. The Dow Jones is down about 0.5%, 0.46%. The S&P is down 0.58%. And the NASDAQ, because again, all these high growth flying tech stocks, when interest rates go up, all the expectations for rates to go up, this hurts high growth stocks more than value stocks. Okay, so let's check out the 10-year Treasury. Not really moving that much at all. It did spike up a bit, but then it just fell again. The dollar though, the dollar is higher off this data, and that's not going to be good for precious metals or commodities. We'll have a look at the precious metals market. Okay, everyone, so gold and silver, they're not liking this, and this is what I kind of warned about. If interest rates do go up, or the expectation that the Federal Reserve is going to taper, this is actually bad for commodities and bad for precious metals. So gold is down around 1.31%. That's a pretty big move for gold. And silver is down 2.06%. So precious metals are actually selling off more than the stock market at the moment. And people, this is a chart I always share, and this is why it's so important to monitor what's happening in the economy and what's the macro picture, not just the micro picture, what's happening with individual companies, because you could be investing in an individual company. All the statistics and data could say it's going to be a great performing company, it's undervalued. But if the Feds taper and if the Fed lifts interest rates, all stocks will fall, even greatly valued stocks. Because look at this. This is the S&P 500 index, and this is the Fed's balance sheet. The blue line, like I said, is the Fed's balance sheet, and the red line is the S&P 500. And we can see here, when the Fed tapers, stocks fall. Also, the dollar strengthens, which is what's hurting precious metals right now. Okay, let's bring it home, everyone. Huddle in. So what this just pretty much means is we're going to see more inflation. The Fed is getting very close, or it's already pretty much exceeded its goals with inflation. It's getting closer and closer to reaching its goal of full employment. But I wouldn't be surprised if they change the category, because now they're starting to change the tune, saying we don't just want unemployment to be low, we want all minority unemployment to be low as well. So they could use that as an excuse to keep the money printer going, to keep the party going. But I think they are going to come under big pressure to taper. Now, whether they will taper, that's another thing, because the whole financial system right now is relying on the Fed Reserve printing money and keeping interest rates low. And also the US government is borrowing a lot of money and wants to borrow a lot more, so they're going to need interest rates to stay low. But unfortunately, the Fed Reserve is pretty much stuck here. They're trapped. They're in a corner, and either they're going to let inflation run hot, and that's going to destroy people's purchasing power even more, and it's going to lead to more wealth inequality, or they're going to have to act, whether the markets like it or not, and start lifting interest rates like what they did in 2018. Remember, no one wanted them to lift interest rates in 2018, but they did anyways, because that's what they had to do, because inflation was rising. But then the markets tanked straight away by around 20%. So everyone, we're going to have to continue to follow this very closely to see what continues to happen. If unemployment continues to keep falling, inflation keeps getting higher and higher, we could see more pain for the markets ahead. But again, no one can predict the exact timing of it. We can only get the rough idea or the rough picture of where we're at in this cycle. Alrighty everyone, so ding ding ding, the markets are open. Let's just have a quick look here. So the Dow is down around 0.6%, so the sell-off is going down a bit. The Nasdaq has fallen about 0.86%, and the S&P, the falls, is kind of steepening here at the moment, is down 0.66%. Okay, let's have a quick look at the Bitcoins. So Bitcoin was doing pretty good. It was rallying close to 40,000, but we still are in a bearish trend here. Can't really seem to break through this 40,000 level or 42,000. It keeps getting rejected there. And so Bitcoin has fallen off its high from the day of 39,400 and it's down around 38,900 as of recording this video. Now, for all my loyal viewers and subscribers still watching, you're awesome. I hope you enjoyed this quick breaking news update, and if you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest that's happening in the markets, and if you're bored, I'll put up some other videos here. I'll see you there.